Welcome back to the Talking Hedge. I'm Josh Kincaid, Capital Markets Analyst and host of your Cannabis Business Podcast. Today we're going to talk about High Times adding a new CEO. The former CEO of Overstock is the new CEO for High Times. Talking about their $100 million debt. That's what we're going to talk about, not the article. On the line with us is Dan Chemist with Good CBD Products. So it looks like High Times named former Overstock president as its new CEO. That's kind of interesting. That former CEO of Overstock was really into Bitcoin. He's really into kind of alternative finance, but it looks like they want to push High Times more towards a distribution model, which I find interesting. They have $100 million in debt. They weren't able to go public, and now they're kind of looking for plan B, I guess, is to be more of a distribution model. So we'll kind of see how that works out. In the grand scheme of things, the $100 million debt is going to be a big deal because this year is going to be all about profitability. There's a couple other articles just kind of touching and highlighting on that. You can see that there was a $50 million lease back option from Cresco Labs in order to get money. So there's a massive amount of constraint in the market right now. So a lot of companies don't have the cash flow, and so they're just whatever property, plant, and equipment that they purchased, they're getting that money back by trying to do a lease back option. So there's clearly not enough capital in the marketplace to survive. Short sellers made a killing in 2019. There's about $250 million that was put into the market to bet against cannabis stocks. And some of the most profitable plays were Aurora and Kronos, Tilray, Canopy, CannaTrust. A lot of people kind of betting against those companies. I'm personally not in the market. I don't think many of those will survive. Just thinking about the wholesale pricing at $1.74 per gram, not really going to be around long term. And so BDS thinks that the price stability for cannabis is there. I also disagree with that. I think we can take a look at a lot of different trends, a lot of different pricing, and just kind of see that as a commodity, it's not stable. We don't even have, federal legalization yet. So there is no stability in pricing, and companies that have $100 million in debt and can't make a profit aren't really going to be around. So I don't think High Times, they're going to have to file bankruptcy if they can.
I get the idea of, okay, we're 8 or 9 figures in debt. Okay. What are we going to do? I know. Let's sell CBD through our existing distribution channel. Quick, hurry. Because again, you got to pay the new CEO, right? You got to this, you got to that. Over the holiday chronic, all I could think about is if you don't have a war chest, you're, not in a good place, okay? And man, oh man, what an expensive 5 years of legalization it's been for folks. It's been expensive.
Absolutely. Just kind of jumping into more of this BDS analytic trends for pricing in general, and kind of looking at, what's moving, what's not. The holidays have just been over. So we'll take a look at, some of the top selling categories, the pricing associated with those, and then you can make your own determination of whether or not prices are stable or not. Looking at Green Wednesday, the second highest revenue day in November, brought in $23.6 million in sales, with the top category being pre-rolls as well as flower. And then right after that was Black Friday. It's the second highest of the entire year, right behind 420. And so that's $26 million in sales, with the top category being concentrates. We had Christmas recently. Those gifts tend to be topicals, 1.4 million. That's a lot for topicals. And then edibles, almost 9 million in sales. But overall, December had the highest sales for powdered drink mixes and teas. That's a trend we see every year. People want infused cocoa and things of that nature at almost 4.5 million. Top selling flavors are peppermint. And preceding weekends with the highest revenue on Friday, Saturday, Sunday in December at 66.2 million in sales. Top selling category for Christmas is candies and chocolates. So there's things that move. Looking at New Year's Eve, obviously you have pre-rolls that sell 54% higher than volume than December's daily average. So things are moving during the holidays, whether it's gifts or just trying to deal with the in-laws. Stuff's moving, deals are being done, prices are being dropped, and that's what's driving people to come in.
We need like some kind of sustained, like a month where, ooh, it's weed month or something, right? Because the market could really use some kind of driver that causes, basically business to increase for a while.
Yeah, I think maybe a good time for that would be harvest season in November for fresh, brand new products to come out to get people into the holiday spirit, into the new year, to try something different. And that always really drops prices low. We've seen 7 to 8 cents a gram for wholesale on companies that are trying to, get out of the game, just selling million-gram lots for 7 to 8 cents a piece. So pricing is definitely what's driving a lot of these decisions. I don't think pricing is stable. But the demand is still there. Nevada saw shoppers spend over $9 million on pre-rolls in October. That's according to BDS Analytics as well. And then, looking at on edibles, you saw $1 billion in 2017, representing about 11.5% of the total $9 billion in consumer spending on consumable cannabis in the region. So $1 billion in 2017, not too bad. Consumers at front-running adult use markets in the U.S. have slightly shifted their spending over recent years to other categories of cannabis consumables, especially into concentrates and edibles. Majority of edibles sold in the U.S. fall into the candy and chocolate categories. So that accounts for about almost $600 million in sales in 2017, or just over 60% of the $991 million in total consumer spending on cannabis edibles. Packaging is an essential component of edible manufacturing to stay in compliance, and a third of the total bill of materials of the final product are for packaging alone. That's crazy. And the edible category,
that's got to change.
Yeah, that has to change. That's way too much. You can't be spending 30% of your profit on packaging. That's not sustainable. So that has to come down. Otherwise, people will not be able to introduce new products. So the edibles category in Colorado outpaced overall cannabis sales growth by 35% between the first quarters of 2014 and 2018, while flower growth trailed at 17%. And so we're seeing, suppressed prices for flower and concentrate. And so I don't think that we're going to see any stabilization anytime soon in the market, especially when we've seen that High Times can't go public. They have $100 million in debt. And, they want to start distributing. So they see, where that the money lies is in transferring and selling cannabis, not magazines, not advertising. But they're going to rely on prices stabilizing, which isn't going to happen.
That model broke long before cannabis came along, right? Online advertising basically crushed your print space. Your print space these days, for the most part, is a whole lot of ads, a little bit of paid for information, and the rare occasion, a little bit of journalism in most instances. And the outcome, for a High Times where is that is the thing, is if you take a High Times from like 1998, a High Times from 2008, and a High Times from 2018, and you start sorting through them, there's not a lot different, okay? The weed images look the same. Yeah, the clothes that some of the people wearing are looking different. A few of the articles are written by different people. It's tough, man. It's really, really tough. This is where, how many different mags have we seen try and sell product at some point, John?
A lot. I mean, there's, Dope Magazine had their own set of pre-rolls and concentrates. Northwest Leaf has some edible products. So yeah, all of these magazine companies or whatever are trying to diversify because no one's really buying magazines. And I know a lot of companies that will not advertise. There's just a lack of return on investment, at least right now.
The only magazine I know that actually makes money in this space is Grow Magazine. And they sell through, different bookstores, and they sell out. And that's the only one that I know of.
Yeah, and that's debatable too, because the bookstores they're selling in have gone bankrupt for the same reason.
Right.
So it's just a matter of time before that whole model goes online. And it's not just High Times, right? So we're looking at people who are short on cash. High Times has $100 million in debt. Cresco Labs had to get $50 million by leasing back their Illinois property. In December, we saw Columbia Care, a multi-state operator, raised $35 million by selling and then leasing back 6 properties that they had. Green Thumb did the same thing for $40 million. And then New York-based Acreage Holdings signed a $72 million sale leaseback for properties they had in Florida and Massachusetts and Pennsylvania.
Oh, MedMen, right? MedMen just surrendered on Arizona, and they're selling off some of the things that they acquired 6 and 9 months ago.
Right. And so that's entirely different. So you have Forefront, you have MedMen, they're divesting their assets in certain areas as well, just completely selling it off. And so that's an entirely different scenario where they're just choosing not to even hold those assets and just selling them. So it's an interesting market right now where it's clear to me that there's a bubble. There's too many players involved, and we're expecting speculation to remain high, and it's not. People are looking for value. They want to know that what they're paying for isn't going to be worthless down the road, right? There needs to be some intrinsic value that increases with time and not the other way around. It's going to be an uphill battle this year. I think that if you look at the stock market with 100 stocks in cannabis at the beginning of 2019, and then at the end of 2019, we only had 40. That's a 60% contraction. So that's really analogous to what's going to happen everywhere else. You're going to see at least 60 to 85% contraction over the next 18 months, in my opinion. Most of these companies are going to fail. CBD and THC companies, lots of consolidation. As you can see, according to Benzinga, they're talking about there's a positive price trend in pre-roll joints, ingestibles, topicals on a year-to-year basis, while flower, vape, dabbable concentrates experiencing continued negative pressure. What they're talking about pre-rolls, that's got to be infused pre-rolls, because straight flower is decreasing in price. And so the concentrator infused pre-rolls may be increasing temporarily, but that'll probably dip again. So yeah, it's just a commodity. It's going to dip, and people are going to have to pivot to stay relevant. Those that took on too much debt without looking at, the profitability long-term are going to have to restructure that debt or go bankrupt. And that's kind of what I believe that's going to happen with High Times. No one is going to take over that debt at $100 million.
Well, you can bet whoever signed those papers is living on a hill, right? Relaxing right now. Okay, they got it in, they got it out, they're gone. That's the way it works.
Well, hopefully the worthless piece of paper will keep them warm at night, and more than likely they'll be diluted. All of those shareholders that had, millions and millions of shares of High Times, they'll get diluted, because nobody, like I said, is going to pay $100 million on a magazine that's not really generating a lot of revenue. They bought up a lot of competition like Dope Magazine, and then unfortunately Dope is no longer around. Probably the same fate of High Times unless they figure that out quickly. So Benzinga says that given the volatility and unpredictability in the cannabis group and the fact that it's so expensive just to maintain a position, shorting cannabis stocks in 2020 is a very risky business. Short sellers sitting on large cannabis gains from 2019 should consider taking profits on at least a portion of their positions in 2020. I would extend that from the stock market to just in general. There is volatility. Cannabis companies aren't making profits. It is risky, and there's a lot of people who are betting against it. And so if you aren't utilizing your first mover advantages, you're probably going to become irrelevant very, very quickly, because you don't have a fat stack of cash to advertise to stay in business. And investors are just looking for a lot of value right now, and they're not going to give you what you think your brand is worth, because it's probably not generating as much revenue as it should, because you're being distracted by likes and shares and social media, stupid stuff, instead of increasing your number of SKUs, your products to 15. And 15 is like that ideal number, because 6 are probably going to make money, 6 are going to lose, and then 3 are going to break even. But as long as you have those first 6 that are making money, it's going to carry everything else. So again, 15 products are going to be the go-to number of products to have. And if you don't, then you're probably being distracted by things that are going to make you lose some money. And that's why a lot of investors are taking money off the table now, because they see that there's just a lot of speculation and not a lot of revenue being generated.
Well, that's why you continue to listen to the Talking Hedge, right?
That's exactly right. Sign of the times, according to MJ Business Daily. So we'll see if that kind of continues. A theme of 2020 for revenue instead of speculation. That's my guess for now. Things could change. You're just going to have to come back to the Talking Hedge and find out. So with that, we're going to roll this one up. I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe, or don't. And I'm out.